Yesterday, artificial intelligence was the catalyst for a rally of risky assets and high-tech stocks. Today, Wall Street relies on a fresh impetus to extend its rally. Apart from Nvidia's report, market sentiment will depend on a business activity surveys. Above all else, investors are sitting on the sidelines of the Fed's annual symposium in Jackson Hole. On a Tuesday, the high-tech sector went up in anticipation of the news on artificial intelligence prospects. In contrast, the Dow Jones and the S&P500 failed to secure intraday gains, negating earlier growth. The Dow Jones closed yesterday 174 points down, or 0.51%. The Nasdaq inched up by 0.06% and the S&P 500 shed 0.28% to close at 4,387 points. The benchmark indexes traded quietly in the New York pre-market. Futures on the stock indexes added 0.1 and 0.2%, and the S&P is expected to trade in the intraday corridor between 4,320 and 4,470 points, depending on whether Nvidia disappoint or inspire traders. Yesterday, both the Dow Jones and the S&P 500 closed lower due to a decline in the energy and the banking stocks. The fact that S&P downgraded credit ratings of several lenders in the United States put pressure on banking stocks. The index of regional banks dropped by 2.7%. The financial sector fell by 0.9%, being the heaviest drag for the S&P 500. Department stores were also among the companies that saw deep daily declines. Macy's shares tumbled by 14.1% after the company warned of weak consumer spending in a crucial holiday shopping season. Shares in Kohl's Corp slumped by 10.3% and shares in Nordstrom fell by 9.8%. US Treasuries again put additional pressure on risky assets. 10-year bond yields hit almost a 16-year high overnight. Nvidia shares hit an all-time high of $181.87 in the early trading, but are down 2.8% on the day. On a Wednesday, futures on the US stock indexes edged up slightly, with a focus today on Nvidia's quarterly results, due later potentially rekindling an artificial intelligence-driven rally in a rise in mega-cap stocks this year. Chipmaker Nvidia's outlook last quarter more than tripled its share price this year and fueled other large-cap stocks in the G7 to boost the S&P 500 by 14%. Rising bets that Nvidia's revenue target will once again surpass Wall Street's estimates sent the chipmaker's stock to an all-time high on Tuesday, but analysts also were fear that a failure to meet investor expectations could spark a massive sell-off in stock markets. Nvidia's valuation rests on confidence in the AI revolution and demand for its high-tech chips. Though it's not expected to drop significantly, its stunning rise this year could leave the stock vulnerable. Nvidia shares rose by 0.4% in the pre-market trading, while shares of other high-tech giants and growth companies showed mixed dynamics. Apple, Microsoft and Amazon gained from 0.3 to 0.7%. Tesla shares fell by 2.5% after reports said the company cut its production target at its German plant. The stock market was supported on Wednesday by the yield of 10-year US Treasuries, which fell from a nearly 16-year high notched in the previous session. A flash composite PMI by S&P Global for August could provide additional clues about business activity and interest rate dynamics ahead of the much anticipated speech by Fed Chairman Jerome Powell on Friday. Traders bet that the Fed will keep interest rates unchanged in September is 86.5% according to the FedWatch tool. Underlying revisions to the U.S. employment estimates are also due later on Wednesday and are expected by many to show that the labor market is not as tight as expected. All in all, stock investors are hopeful that Nvidia's earnings report on Wednesday could fuel the rally in the indexes. The US dollar stands fall in the currency market. The small PMIs for the Eurozone and the UK had the impact on the European currencies, and the US dollar index added 0.36% before the opening bell to trade at 103.90. The index is likely to trade in the intraday corridor between 103.30 and 104.30. Weak PMIs from the European Union and the UK pushed the euro and the pound sterling down by 0.3% and 0.7% respectively against the US dollar. Yields of European government bonds declined as traders increased expectations that the ECB would complete the cycle of rate hikes. Now markets estimate the chance of a further tightening at less than 50%. The 10-year US Treasury yield fell to 4.25%, more than 10 basis points below the 16-year high hit on a Tuesday morning. At the same time, the 30-year yield dropped by more than 12 basis points from the 12-year high reached this week. The annual yield fell below 5% again. The US dollar has climbed to its highest level since the beginning of June, and this week the greenback has a good chance to rise even higher. The Canadian dollar is losing ground today. The USD CAD pair traded 0.36% up at 1.3590 at midday, and the intraday corridor is seen between 1.3560 and 1.3630. The loonie is facing a double whammy today. On the one hand, the US dollar is advancing. On the other hand, oil prices extended their slide. Oil prices plunged by more than 1% today as investors are discouraged that global manufacturing activity is losing momentum ahead of the Fed's annual summit. Brent crude sank by 2% to trade at $82.30 a barrel, while WTI fell by 2.2% to trade at $77.84. This small PMI data gave a glimpse of the state of the economy around the world. Japan also reported a contraction in the manufacturing activity for the third month in a row in August. Business activity in the Eurozone also contracted more than expected, especially in Germany. Meanwhile, the British economy appears to contract in the current quarter and is in a danger of a recession. The data influenced the trajectory of oil prices, which in turn dragged down the loonie. Top altcoins are trading higher. Ethereum, Solana, Ripple, Cardano and Binance gained from 0.3% to 1.4%. Despite the lack of a positive news, crypto assets are trying to recover and they need certain fundamentals. Bitcoin should follow its direct correlation with the Nasdaq, and Nvidia should unveil an optimistic forecast. Until this happens, the market has to deal with the report on the Bank of International Settlement. Cryptocurrencies have an illusory appeal as they are a simple and quick solution to financial problems, especially in emerging markets, but so far have not reduced but rather increased financial risks in less developed countries, the report says. As for the intraday outlook for Bitcoin, the token has found support at $25,800. Positive news may help the crypto to rebound to 26,200 and 26,700, and the bearish scenario suggests a fall to $25,400. Our team has been monitoring events in the financial markets to make you aware of ongoing trends and risks. Share your viewpoints and ask any questions. Make profits with the InstaForex and see you soon.